Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday and it's July 11th here. We got a couple items here on the docket, so we'll kind of delve right into it. We'll start out with the Producer Price Index, also known as the PPI, for the month of June. These next two are basically wholesale number, inflation on the wholesale side of things. Now, we do look at these, but they're not the most relevant in the terms of, sometimes inflation or costs go up on the wholesale side, it doesn't always get passed on to the consumer, and that's really what we look at. That's why the CPI and the PC, especially the PC, because that's the Fed's favorite gauge, are a little bit more relevant. But we do look at the PPI as well. So as you can see, we saw some pretty big spikes here, especially in May. We had a 0.5% spike on the headline number here. Now the forecast for June was supposed to come in at 0.2, and it came in a little hotter than that, 0.3%. Now when you strip out the food and energy, we get the core PPI. This creates a little less volatility in the markets, and you can see pretty much the same thing. We had a pretty good number in May at 0.3%. Forecast supposed to be at 0.2, and it came in again at 0.3%. So a little bit hotter. So food and energy didn't really sway the numbers here for the overall headline number here. Again, this will be kind of interesting to see because we do get the CPI number this week, so that will be an important gauge, and that could definitely move the bond market one way or the other. If inflation comes in a bit hot, we could see a sell-off on the mortgage-backed securities, and this is primarily because inflation is what we consider the arch enemy towards bonds, and that is because a bond, of course, is tries to maintain its value over a 30-year period, and anytime when you have a spike, it can erode that value in that time period. So it kind of ruins the value, and that's why it's considered a arch enemy here. Last but not least, we got the wholesale inventories from the month of May. So in April, we had a 0.5% increase or jump in wholesale inventories, and the forecast is supposed to be continuing that same trend, another 0.5%, but it had a slight improvement in that at 0.6%. So we had a little bit more than expected here, but pretty much in line here. Let's take a look here at the headline news. Stock market is down. We've been up for the last several days, and they've been shrugging out the tariff talk. But today we had a new round of tariff talk that were announced today. Basically, these will be more implemented towards the end of August, it looks like. Again, this is aimed at China here. This time it was announced to be, last week we had, same retaliation last week from China was that we aimed, I believe it was 25% tax on $34 billion. This time it's a 10% tax on $200 billion worth of goods. Now he's going to determine as to what goods those will be, and look like it'll be implemented towards the end of August. Now this will, of course, China's reacting pretty negatively towards this. They don't like it, obviously, but it'll be interesting to see how they come back at it because they don't import that much from us. So if they're going to go for dollar, in this case they can't because they don't even import that much from us. So again, this will be interesting to see how this shakes out here. And of course, this could be cat and mouse type of game here, and I guess it could be who blinks and who blinks first, I guess, type of game here. So let's kind of move on here to see how the bond market is moving. Bond market, it shows like we dropped a bit further, but we didn't. We had a 5%. We had what they call bond rollover last night, which was only translated about 5 basis points. So it was lower by 5 basis points. Now, what that means is that it's a reset in the pricing for bonds. It has no impact on pricing for interest rates, but basically it will be the same. But it's basically a reset. So bond market has a new, 30-year loan basically starts each month, and they do a reset in its price or reset in its level here. So when they package these up, some on Wall Street, it's a reset, and then we start the new month off, and that was last night. So right now we're currently down a little bit, but we're at we're actually about the same. I'm sorry. Here's where we left off yesterday. Here's where we are now. We were down a little bit further. We were touching off the 25-day moving average. We're kind of in this range now, and hanging in there. Now later today we do have a 10-year Treasury auction going on that could help or help boost, or could even push us down further, depending on the demand for the 10-year Treasury. So that could help or hurt us as well. Let's see how the yields are looking. Still kind of in the same range. We're down to about 2.86 on this level right now. We're down from where we closed yesterday. And again, we got plenty of room, pretty much either side, which way to go here for yields here. So rates are about the same as where we left off yesterday. There's really now change in our pricing as of yesterday, but again, that could change a little bit later on today with the 10-year auction giving us either boost or dropping us further. So it depends again on what kind of demand there is at the auction. So that wraps up everything today. If you guys want to get more data, get some more updates throughout the day, just go over to Twitter. You can find me at Mike Bjork, and I do post throughout the day updates as well. All right, folks, have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.